Here are the 6 mini financial plans every executive and high income earner need. The first is workplace benefits maximization. There are 7 key areas within that mini financial plan. The first thing is deferred compensation. It involves taking your current salary, bonus, or any other additional compensation and taking less of it today and more of it in the future, hoping you're in a lower tax bracket. Common issues include rushed elections, not understanding matching contributions, missed dates, how the money is invested, and not understanding specifically how this could play out under different company and personal scenarios. There's also understanding how this is integrated within your 401k, your health savings account, and other savings goals. There are huge tax mistakes and opportunities here. No transferability to another company or 401k. There are a lot of non-revocable options that are elected. And something also to consider, you're not covered in bankruptcy. The second category under workplace benefits maximization is pension versus lump sum. You can either receive payments with sometimes endless options or a benefit in one check. So which should you take? This is highly dependent on your pension plan, the payment, your personal situation, your time horizon for when you might pass away, what the opportunity is to invest this money, and of course, how this money might be invested. And let's not forget taxes. The third thing in workplace benefits maximization is employee stock purchase plans. Some publicly traded companies offer a benefit to purchase your employer's stock at a discount during regular intervals throughout the year. There's a huge missed opportunity here. Even if you don't like the future prospects of your firm, there's a discounted stock program, and you can sell the stock immediately for a gain. Imagine buying a $100 note for just $85. That's an ESPP plan in a nutshell. You can set aside up to $25,000 of your salary annually for this benefit should your company offer it. The fourth area of workplace benefits is equity compensation. Things like restricted stock units, performance stock units, and many other categories. You receive stock in your company as a form of compensation that vests throughout the year. This can be one of the biggest benefits within your workplace, but also one of the largest risks with concentration risk, where you own so much company stock, plus the same company that you own stock in, you're also receiving your income in. Then there are all the tax consequences. You're having to pay tax when this vests. So that means things like estimated payments, and also, what do you do with all this extra cash after you receive it? What could you do to make certain adjustments to pay less taxes? The fifth area is your group disability insurance and your group life insurance. First, let's talk about disability. Your earnings are the largest asset that you don't see on your balance sheet. In many cases, it makes sense if you're on a group plan to pay the additional few dollars to get the largest coverage possible. The second is group life insurance. You have needs covering a spouse, kids, college, a mortgage, and let's not forget what we just talked about, missed earnings. This is another large missed benefit. Do you really have enough? Or maybe you have way too much? The sixth component of workplace benefits maximization is health insurance and the fears if you're under 65. How are you going to be covered when you're not on your company's insurance? And now you need to purchase it on the exchange, where premiums are based on your projected income. And also, what credit would you receive at certain annual income levels? And the timing of cash flows can impact this significantly. Should you stay on COBRA at your company's plan? And how do other strategies affect this? The seventh category of workplace benefits maximization for this mini financial plan is, does it make sense to leave and take a severance package? During a restructuring, there is a lot more compensation and benefits that are bundled in 1 year with the severance package. As you age and competition intensifies, the longer you're at a company, there's a higher likelihood that this occurs. Taxes are a huge component. and negotiating how to keep all these benefits you'll receive in a compressed time frame, like the vesting of your deferred compensation, restricted stock units that may vest. Maybe you receive multiples of your compensation, and a bonus. This feels like free money until you realize that the more you get in a single year increases your tax rate. These are the 7 categories of workplace benefits maximization within this mini financial plan. If you need any help within these categories, we would love to figure out if we're a great fit to help you. You can reach out to us at honestmargin.com. Thanks so much for watching.